wanted to check in with an episode of Fast Five, 5 quick market ideas in less than 5 minutes, just because there's been so much information about this war in Iran. And I want to talk with you about how it can affect things going forward. The first chart I have up is just from the Wall Street Journal showing the markets as of this morning, Thursday. And it's showing that things have actually been very resilient over this week, despite the fact there's an open, hot war in Iran. Things have been relatively stable. Today's Thursday, things are a bit volatile, but I believe that the volatility is temporary. I also want to highlight on my first idea. This is a chart from First Trust, one of the largest investment firms in the country. I've attached this in a PDF to the email, but it's showing you the last 100 years and the number of major geopolitical risks that have happened. And throughout this time, markets have climbed a wall of worry. And I think that will be the same thing here as well. So this is geopolitical risk is very normal. In fact, 8 of the last 10 major geopolitical risks, markets were higher a year later, and you can see that here on the screen. So I believe this is temporary. I believe the fear-mongering, the rational fear that we have is very normal, but I think it will dissipate over time. I want to turn directly to the war in Iran. There's so much information, and specifically misinformation, so much data out there, and so much energy. I like the Wall Street Journal. It's one of my primary media sources, and their editorial board is very well respected. They've written a lot on this, but I think there are a couple points from this morning's op-ed did a good job of consolidating it. Despite what we see in the newsfeed and the evening news, they believe that the evidence so far is the war is going better than could be expected. And they highlight today that it's hard to imagine that the Middle East won't be a safer place without the regime in Tehran chanting death to America and supporting the proxy. So time will tell. War is always a difficult thing, but it will probably, or hopefully more than likely, be the case that things are better for the world and more stable for the economy going forward. I also want to talk about statistics. This is a great chart, a great quote from Mark Twain. You've heard it before. There are lies, damn lies, and statistics. 2 quick polls that came out. CNN asked people, do you support the war in Iran? 41% of people said no. Okay, so the vast majority of people were opposed to the war. But at the same time, CBS asked a similar question, but just tweaked it a little bit. And they asked, would you support the war in Iran if it eliminated their ability to make nuclear weapons? And 51% of people said yes. So I highlight this only to make the point that statistics are often misleading. Even if we have 2 trusted sources here, they can have much different data. So we just have to pull back, whether it's politics or markets specifically, and be aware that there's misleading information out there. I want to talk about oil prices. This seems to be something that's floating up on the newsfeed. People are very fearful about this. I just want to make 2 quick points. Volatility in the oil space is very rational, very normal. Wall Street Journal has some interesting data here that I myself wasn't aware of. But over the last 20 years, the inflation-adjusted price of oil is $96 a barrel. And even now, for trading less than 80, that's meaningfully less than the case. So this is not a hindrance to the economy from some data until we get to about the mid-90s. So despite the fact we have an open war in Iran, I think that this volatility as well in the oil markets is temporary as well. That's not to say there aren't fears out there in the marketplace. I just don't think it's this war in Iran, which I think is very temporary and will lead to more stability. I think there's a lot of fear I'm hearing from clients about AI taking jobs from people. And I do think that's a realistic fear. I think it's overblown. I'll share more data on that in the months and weeks ahead. But the second one I think is a real fear is the national debt. I don't know when this is going to come to materialize, but we are not taxing enough, or we're spending too much, or something in the middle. So I think that will be a problem in years to come, and we'll talk more about that. But I want to end on a positive note. One of the primary drivers of market growth and stock market performance are earnings. How are earnings growth year over year? And the 4th quarter just finished reporting. It's up 15% year over year. This is exceptional returns, better than expected. It's the 5th quarter in a row with double-digit year-over-year returns. So I think pulling back from all the noise, corporate America is doing very well, and that can work to support prices going forward. I will keep you posted. If you have any questions, please let me know.